Welcome back to the channel, everyone. Today I want to take you down the rabbit hole that is short interest. In one hand, we have the red pill. You can click out of this video and go about your day. But in the other hand, we have the blue pill, and I'll show you just how deep the short interest rabbit hole goes. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Trades tweeted earlier saying, I just got off the phone with TD Ameritrade. The licensed specialist just confirmed reported short interest as of the 15th of December is 40.25% for AMC. TD Ameritrade care to explain. But so what's actually going on here? Hasn't Ortex been reporting for months that short interest is only somewhere between 18 and 21, maybe 22%? Why is TD Ameritrade reporting 40.25%? And just before they reported 40.25%, there was a glitch showing 4,025%. So what's going on? And is it also happening to other brokers as well? We can see this screenshot posted by Short the VIX directly from TD Ameritrade showing 40.25% of the float as of the 15th of December being shorted. Now interestingly, TD Ameritrade aren't the only broker. RBC are also reporting 40.25% short interest as well. And interestingly, so is E-Trade. They are also reporting 40.25% short interest. So have three separate brokers, all got the same number and all got the same data. And on top of this, Jackson Hunter went directly to TD Ameritrade's live chat and had a discussion. He said, hi, TDAmeritrade.com shows the AMC ticker short interest as a 40.25%. Can you verify that this is accurate? The respondent said, hi, my name's Dylan from the trade desk. Thank you for chatting in. I'd be happy to help. The website is showing 40.25% as of the 15th of December. I do not have an updated number for that, so I cannot confirm whether it's accurate or not. However, it was definitely accurate at that time. But moments later, TD Ameritrade replied saying, thank you for asking. We've checked and found the data not to be correct. Our technology team is working to correct the information. We have no ETA, but hope to have the correct data restored soon. I think it was something like a third party providing data to TD Ameritrade that somehow got the data wrong. Maybe this third party is also reporting the same data to RBC and also to E-Trade as well, and they've just reported the wrong figures to all three different brokers. But as Trey says, these glitches and errors seem to happen across the platform on such a consistent basis, and it's just not good enough. He said it makes it pretty hard to believe it's an error when it happens this frequently. Either that, or these guys just don't know what they're doing. Now I've actually got a theory that I'm going to break down a little bit later on in the video of exactly what's going on. Is it just an error that keeps on popping up? Or do they actually have no clue what they're doing? Or actually is the data completely separate and they're getting confused and muddled up, all trying to have the same data when they're clearly just trying to share a lie? There's a theory around lying. I don't really know how it works, I don't really know who created the theory, and I don't really know what it's called. But supposedly when you tell a lie, it's then harder to tell the same lie over and over and keep to the same story. Obviously, if you're telling the truth the whole time, there's nothing to get confused about. But when you tell a lie, it's harder to tell the same lie over and over, and you might get confused and muddled and forget what lie you're actually telling. But as I said, I'll explain it a little bit later exactly what my theory is. Guys, if you didn't already know, Moomoo is a brilliant commission-free broker. They also don't make their money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees. And this way you can trade commission free, but you don't have to worry about your trades going through sketchy dark pools when those trades are submitted and executed. And Moomoo has excellent technical indicators and even publish daily short selling volume among a number of other interesting pieces of information. And right now you can get up to 5 free stocks valued at $3,500 each. So that's up to $17,500 in free stocks when you sign up to Moomoo using the link in the description below and make your first deposit. TD Ameritrade said, we apologise for the confusion. Given the numbers from our fundamentals page, 96.7 million short interest shares over 514 million shares outstanding equals 18.83% of the float. Our technical support is working with our vendors to verify this information. And the masked investor says, well, apparently 3 different brokers all made the same mistake for their top tier clients with AMC. Funny how things work. And he says, I think the number one stock of the year should get a little bit more attention and care from brokers. It literally took 30 minutes for this all to be handled and resolved. It seems unusual that vendors are providing incorrect data to some massive clients like TD Ameritrade, E-Trade and others as well. Now you might say, Tom, what do you mean by AMC being the number one stock of the year? Well, Yahoo have a rating for just how many times a certain stock has been searched on their platform, and they revealed the top 10 right here.
Now, let's deliver the promised top trending tickers of the year from Yahoo Finance.
That's right, and drumroll please, because I have this up on the Wi-Fi Interactive. Are you going to believe what the top spot is? It is AMC, and how fitting that for a retail-oriented organization like we are, that this would be the Wi-Fi top trending ticker of the year. I don't remember the exact figures, but it beat out Tesla, which is a number 2 here, by about 30 million views. So a lot of interest in AMC this year.
So there we have it. AMC was the most searched stock this year and beat out Tesla by over 30 million views or over 30 million searches. It also beat out GameStop, Bitcoin, Nvidia, Amazon, Apple, and many others. So what I think is going on is that obviously AMC shorted a lot more than they're reporting. There's not just 96.7 million shares shorted. There's obviously multiple hundreds of millions of shares shorted, if not multiple billions of shares shorted. Therefore, all of these different vendors are having to stick to the same lie at the moment. They're having to stick to 96.7 million shares being shorted, or 18.83% of the flow. Now, obviously, a number of vendors have slightly different data. That's why you see different numbers of shorted shares in Ortex compared to S3 Partners, compared to other sources as well, like Fintel. But obviously, all of these vendors are having to have vaguely the same amount of shorted shares and obviously not stray too far from each other, and are all trying to keep it around 96.7 million shares. But now where the problem arises is inside these vendors, they all have multiple different employees. Maybe they have different employees in different offices. Maybe they have different levels of employee. Maybe they just have multiple employees at the same office that are all reporting short interest data. Now, maybe on some days there's a new employee that's reporting the short interest data for AMC, and maybe they report the true figure, and then obviously it has to be covered up and called a glitch or a mistake, and just an error that needs to be fixed. This way they can very easily blame it on an error and correct it back to the true lie of 96.7 million shares without really revealing just how many shares are actually being shorted. Maybe there's a slightly different lie being told, maybe everyone's kind of on different pages, and that's why on some days we see 18.83%, some days we see 2,000%, some days we see 40%, some days we see 4,000%. And because there's so many different vendors, so many different employees, so many different offices, and everyone's trying to stick to the same lie, it gets difficult and confusing, and that's why they're making so many mistakes or so many errors or so many glitches. But so why are all these vendors trying to stick to the same lie, and why are they lying about the short interest? And why are these glitches now starting to become a problem for these vendors and are now starting to work against them? Today I want to show you the most important thing that I've seen in AMC and one of the most bullish things that I've seen in AMC for a very long time. And that is the overall worldwide or United States search trends for AMC. Obviously back in January, we saw AMC hit 100 out of 100 on Google Trends. It then very quickly dissipated down to 21, 13 out of 100, and then in May it returned back to 13 and 14 out of 100. Obviously in January there was a lot of attention around AMC, there was a lot of retail buying, there was tons and tons, hundreds of millions of shares all being purchased just of AMC, and that's what caused the run up. There was shares being purchased, there was options being purchased, and overall we just overloaded the system, and the system could not handle it, and that's why AMC, GameStop and other meme stocks all ran together. Now obviously we know that that then quickly dissipated, and for a long time between kind of February and May time there was very little interest in AMC, and that's why they could suppress the price. But then back in late May, we saw this small uptick in interest from 13 to 22 out of 100, and then that absolutely blasted off all the way to 88 when all of that retail buying came back in and we once again overloaded the system. Now the reason why the June run up didn't cause the AMC squeeze and didn't overload the system like what happened in January is because back in June the rating was only 88 out of 100 and not 100 out of 100 like we saw in January. Obviously the retail interest was so high back in January, that's why the hedgies and the DTCC had to turn off the buy button, and it didn't happen in June because the interest was high but not quite as high. But right now over the last 2 weeks we've again seen this uptick in interest from 16 all the way to 36. Now this is the same uptick that we saw back in early May or back in mid-May from 13 to 22, but this time it's even more amplified. We've not just gone from 13 to 22, we've gone from 16 all the way up to 36. And I think this uptick in retail interest could very much lead to the next run up in AMC. Why? Because now the retail interest is coming back and soon those systems are going to get overloaded once again. Now we haven't seen this level of retail interest since early to mid-July, and that's why previously back in August, back in September, back in October and November we didn't see AMC run because yes, we had many different catalysts that could have caused the run, but we didn't have that retail interest and that same level of retail buying. But over the last 2 or 3 weeks, we've started to see this uptick in interest from 13 all the way to 22, or from this time from 16 all the way up to 36. And now we're just waiting for the next catalyst to kick us into overdrive and to again overload those systems. But so why are these vendors trying to do absolutely anything they can to hide the true short interest and to stop the retail interest coming back to AMC? Well, it's because they're in a danger close situation and the DTCC could effectively go bankrupt. This is an extract from the LinkedIn post on weaponizing the chill and freezing of stocks that I spoke about in the other video on how DTCC can chill and freeze stocks. It says during the January gamma squeeze or during the January run-up, the company's or the DTCC's $67 trillion insurance fund was in firing distance, but currently the fund is in imminent danger. It says the GameStop and AMC threat has not gone away. In fact, it's been amplified to a degree that the company or the DTCC itself would soon be defunct. It says given the number of synthetic shares issued by Citadel and Susquehanna, the current market capitalization of both companies would not adequately cover the company or the DTCC if there is a short squeeze. Given the die-hard loving commitment of the retail community for these two stocks, there is an exception that the price of the stock would exceed a whopping $100,000 to an astronomical $1 million per share. Given the strong social sentiment on Reddit, Twitter and other social media applications like here on YouTube, retail investors are not expecting to sell any shares in either company until each stock reaches astronomical heights never seen before in market history, subsequently bankrupting the DTCC's insurance policy, and the DTCC is well aware of the systematic risk involved in this and have potentially come up with a mischievous plan to avoid payment. Now the rest of this extract talks about how the DTCC could use chilling and freezing of stocks to their advantage and try and stop the squeeze by effectively temporarily chilling or freezing the stock, stopping all buying and selling of that stock. This is effectively what they did in January, just limiting the buying of the stock, but they could effectively limit both the buying and the selling if they so choose to, because I guess at the end of the day, the DTCC can do whatever they want. But I do think they'd be met with far too much blowback if they did actually decide to do that, considering what happened back in January. And obviously they didn't decide to do it in June because they just knew that they couldn't. But I do think that overall, this is why we're seeing so many glitches happening in AMC. Both glitches happening to the price and glitches happening to the short interest or number of shorted shares. And it's because when somebody is telling the truth, there's nothing to hide and nothing to get confused about. But when somebody's telling a lie, it's so easy to get confused with that same lie, especially if there's so many people trying to be on the same page. And that's why so many brokers and so many vendors and so many employees are having a difficult time trying to stick to the same figure. And that's why there's so many glitches or errors that are sneaking through and not being detected and only corrected later and then again blamed on being an error. Obviously, these vendors and brokers are trying to stop the true figure from getting through because they know if the true figure does get through, then retail investors and other institutions will be back with a vengeance to buy even more AMC and will effectively cause the squeeze that way by just buying so many shares and creating all of that retail volume. And the reason why they're trying to hide it is because the DTCC and the Fed know how much of a systematic risk that meme stocks pose to the US economy. And that's why in the most recent Fed risk report, they highlighted meme stocks as having systematic risk. Yes, it is stupid that the economy is so fragile that two singular stocks or even one singular stock could squeeze and destroy the whole economy. But I guess that's kind of the position they've dug themselves into by creating so many synthetic shares. I think overall the DTCC, the Fed and these vendors and these brokers are worried what will happen to the US economy if AMC and GameStop do squeeze, and that's why they're trying to keep the true figure under wraps. Guys, be sure to let me know down in the comments below what you think about the true short interest of AMC and what the true short interest figure actually is. How many shares of AMC do you think are out there circulating right now, and how many shares do you really think are being shorted? And also, if you want to stay up to date with my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.